Welcome back to the channel, ladies and gentlemen. This is the Digital Asset Sensei and or the Pendecker of Finance coming back to you once again for another episode of Things You Should or Must Know, ladies and gentlemen. Now, as you can see up on the screen here, we have the U.S. debt clock, thus showing us that the fiat system is a debasing currency. Your money is constantly losing purchasing power. Every dollar in your pocket right now only has a purchasing power of 3 cents, ladies and gentlemen. Okay, which is why we are here to learn about blockchain technology, because we used to have a saying, and that saying used to be, we said it, our parents said it, our grandparents said it, that it wasn't what you knew, it was who you knew. Those days are over. We are now back to a time where it doesn't matter who you know, but it matters what you know, ladies and gentlemen. And what you should know is that we are moving into a time now where, because of fiat, which is the fractional reserve monetary system, that currency is debasing and debasing and debasing. And now even they have to integrate with blockchain technology and or cryptocurrency. All right. And I'm going to show you, you would do well for yourself to listen to the entire video, because we have now evolved into a new area of finance, and I will explain it to you. I'm not going to go super deep. I'm going to try to make this as surface as possible just to introduce you into what's going on. I am going to give you the cheat codes to the game. Know the game, play the game, win the game. And we are here to make money. Most of us within the sound of my voice are not financially independent yet. Some of you are. And for those of you that are, you already understand nearly everything that I'm going to say, okay? But most of us are not wealthy, and most of us are consumers. And as consumers, you remain consumers because there is a cycle. There is governed by the principle of force, okay? The wealthy know this game well, and they hope that you stay there because that is how traditional finance and or the fiat system was created. However, blockchain technology is different in the conceptual thinking of how things are done. You see, in the TradFi system, it was all about, the wealthy being wealthy, and the more poor you stayed, the wealthier they got. But in blockchain, that concept is kind of flipped on its head, because Satoshi gave us the first principles of a peer-to-peer cash system, that the more people that were involved, the better everyone would do. And he also gave us this system called Bitcoin, of course, so that we will finally have something that the predators and the oppressors of the world could not take away from us, because every time we got something that could help us live better and free ourselves from dependency on them, they take it away from us. All right. So now they are starting to see that their own survival now is dependent upon blockchain technology as well. And of course, they want to be in control of it. But unfortunately, or fortunately for us, that Bitcoin cannot be controlled by any institution, government, or banking structure, ladies and gentlemen. So, with that, I just want to give you the game, ladies and gentlemen. And the game basically is, if you are to understand where you fit and how you can access this generational wealth so that you too can become wealthy, because that's what blockchain allows you to do. It allows you to take part. No longer do you have to ask for a seat at the table. No longer do you need the hookup. No longer is it about who you know, because, oh, I've got a cousin that's a celebrity, or I got a cousin that work at the bank. I can get the hookup. I can get special rates. It's no longer about that, ladies and gentlemen. It's all about what you know. And I'm going to teach you the game, because all of the liquidity in traditional finance now and or Wall Street, you know, uh, the liquidity is there. Now, concerning blockchain, of course, that is regulated by this one here called Bitcoin. Okay. And Bitcoin follows Wall Street and or the S&P 500, and all of the altcoins below Bitcoin follow Bitcoin. So when Bitcoin does well, basically, let me put it like this. When Wall Street does well, Bitcoin does well. When Bitcoin does well, all of the other coins do well as well. Now, there is a subtopic here that I'm not going to explain here, but if you've been on this channel, you will understand this subtopic. And that subtopic is the BTC that you see in the number one spot there is not Bitcoin. There was in the year 2017, there was a deception created by Greg Maxwell and Jack Dorsey, the one who sold Twitter to Elon Musk, the former owner of Twitter. Yeah, him, Jack Dorsey and Greg Maxwell, they came up with BTC, and they told the world that it was Bitcoin. In other words, they took the original and made a modified copy. They destroyed knowledge of the original. They present their modified copy as the original. Okay, if you want to understand what I'm talking about, all you need to do is read this. Go to that's BTC not Bitcoin.com and you will understand what I'm talking about. But let's go back to this because we're not talking about the original Bitcoin protocol today, which is in the form of BSV, ladies and gentlemen, or Bitcoin Satoshi Vision. We're not going to talk about that today. We're specifically talking about BTC, that which they tell the world is Bitcoin, okay? Because what we're going to do is we're not going to leave that money on the table today, ladies and gentlemen, because BTC, as Dr. Craig Wright put it, BTC is digital gold, whereas BSV, the original Bitcoin protocol, is digital cash. Because it has infinitely scalable blocks, it can transmit at starting at 1,000,000, 2,000,000 transactions per second and go on and forward. Okay. But we're specifically talking about this digital gold here today, which is BTC, ladies and gentlemen. Now, so we're just going to leave the original Bitcoin protocol on the side for a minute because we are talking about now how can we earn yield utilizing BTC, ladies and gentlemen. Now, how we can earn yield on that is there is a new phenomenon that has come about because of Michael Saylor buying up all of this BTC, ladies and gentlemen. As you can see, it has now risen up to $81,000. Okay. And as I tell you guys all the time, when it comes to these coins and the digital assets that you're holding or that you choose to hold, price is a distraction. If you know what you hold, the price doesn't really matter. What matters is, are you earning yield on that? Now, most times you cannot earn yield. BTC was not set up. Even the legacy Bitcoin of 2009 was not set up to earn yield. Okay. It was a peer-to-peer cash system, you know what I'm saying? And even that was only 5 transactions per second, which the BTC now is between 5 and 7 transactions per second. So it is very, very slow and it is very expensive to transact. Okay. So where are we going with this? Where are we going with this is now that we have this BTC, now that Michael Saylor and his company MicroStrategy is using or buying as much BTC as they can get their hands on, then they have created different strategies for people to invest in that give the upper hand to a lot of people who, whether they are wealthy or whether they are in retail, because it is now open-ended. All right. Let's go over here and let's quickly look at strategy.com, ladies and gentlemen. If you go over here, STRC and MSTR holders, saying votes are now open for that for semi-monthly dividends amendment, this, that, and the other. But if you look here on Strategy B, they offer several products. They got MSTR, they got Stretch or STRC, they got STRD, they got Strike, they got STRF, and then they got regular Bitcoin itself. If you go over to Bitcoin here, you got this, and then you got the yield quarter to date over here, 6.1. A KPI that represents the period specified for quarter to date, the percentage change in BPS, this, that, and the other. Now, I'm not going to go through all of this stuff here because I know you guys are saying, where are you going with this? Where I'm going with this is here, ladies and gentlemen. And where I'm going with this is when it comes to this right here, this specific project, stretch, they like to call it, on strategy B. Basically, what you're doing is just to make it very simple. You give Michael Saylor your money, he buys Bitcoin with it. Okay. When he buys Bitcoin with it, what he's doing is he's taking on all of the risk. He's going to manage the volatility. He's going to be responsible for holding or what have you. But in return, even though you may not own BTC itself, you are looking to make money. So if you look here, he gives you an annualized yield on stretch based on his current dividend rate and the stretch price. It is calculated as stretch dividend stretch price. So you, my friend, are getting 11%, 11.5% a year on your money. And that is, how should I say, phenomenal, ladies and gentlemen, because previous to this, you didn't have access to yield like this. Okay, if you are, unless you are financially independent. Now, if you're a millionaire, then yes, you had access to this in the form of these firms would offer you, the best that they could offer you was a rate of 12%, ladies and gentlemen. And that rate of 12% that they gave you, if you were a millionaire, if you were an accredited investor and or a qualified purchaser, they could give you 12%. And what that essentially means is that they were offering you something where you were able to utilize what they call the law of 72. And the law of 72 simply states that your money, whatever money you put in, will double every 7.2 years. However, if you are not a millionaire, if you are not a accredited investor, you can never ever get anything near this. And if you put your money in the bank, you will get 0.3 or 0.7% on your money. The key number being zero. In other words, next to nothing, ladies and gentlemen. So, why am I telling you guys all of this? Because now, because of this yield that is given by Stretch, there are some digital asset treasury companies utilizing this have come up with a new concept, if you will. Now, if you come from traditional finance, you understand something about convertible debt. You understand about preferred private equity. This is basically the evolution of those things because it's within the same vein of how do we earn yield. And basically, platforms like Saturn.credit is giving you 11% yield, which is backed by Bitcoin, backed or BTC, I would say, of course, because of what I told you previously. So it is what the term now is being called is this is a new standard for on chain yield. It's first gold, digital gold, then sovereign, ladies and gentlemen. Now Bitcoin, the first global verifiable collateral base for the future of credit, ladies and gentlemen. So now Bitcoin's next transformation is digital credit. I want you to really understand this phenomenal thing that has now because Michael Saylor's strategy, even if the price goes down, even if the price cuts in half or whatever, he is underwriting or ensuring your yield of 11.5%. So these digital asset treasury companies now that are investing in Michael Saylor's strategy and getting that and integrating it with things like this has formulated this new concept called digital credit so that now nearly anyone that has the courage and the ability to be an investor that you can get these yields offered to you. So now you've got the backing of traditional finance and the liquidity that's coming from traditional finance as well as the money that's coming from retail and or the average person, ladies and gentlemen. So if we take a look at this, here's how it works. Institutional grade yield. You can access premier risk adjusted returns, amplified digital credit exposure, and you get this coin here, which is USDAT, a non-yielding stablecoin backed 100% by tokenized US treasuries, used for permissionless and instant access to digital credit, ladies and gentlemen. Access to digital credit. And the key word being permissionless, meaning you don't have to ask anyone's permission. The government's not going to stop you. You know what I'm saying? And institutions are not going to stop you. Bureaucracy is not going to stop you. You know what I'm saying? The in crowd that formerly didn't let you in isn't going to stop you. So it is a permissionless and instant access to digital credit. Okay. So this is why we convert our fiat into these digital assets so that we can enter the permissionless realm so that we now gain the ability to have the power of choice in our life. And as we continue to become wealthy, ladies and gentlemen, because being wealthy is a mentality. Being wealthy is not about what you have. Being wealthy is about how you think because it's all about abundance. And if you are truly living in abundance, it reflects in liquidity. It reflects in money. And I'll prove it to you because wealthy people don't own nearly anything, but they control everything. And that's what most consumers don't understand. They think it's all about ownership and having money and this and that. And oh, I've got millions of dollars. No, well, legally on paper, they don't own anything, just like Elon Musk's. He's the richest man in the world, but he doesn't own anything. He doesn't even take a salary. He owns nothing, but he controls everything. Let's move on. And then when you stake this token, it is yield generation and savings. The staked version of USDAT backed 100% by digital credit stretch, once again, as digital credit dividends accrue, STAT price increases. Okay? And then you can go to the Saturn app. And it's 24/7 borderless access, ladies and gentlemen. You don't have to wait for Wall Street to open up. You know, it's like, oh, I can't get to the polls. I can't trade oil today because it's Saturday, it's Sunday, but very soon Wall Street will be on chain. And things like Hyperliquid over here that I just showed you is already making that possible where you can trade 24/7 around the clock. And this is why digital assets, ladies and gentlemen, allows you permissionlessly to make as much money as you want. You see, so 100 plus million in total value locked, 8.5 billion digital credit market size. And we're just getting started, ladies and gentlemen, because this concept that is a more sophisticated version of what traditional finance people called convertible debt and or preferred private equity. This is more advanced than that because see previously they were dealing with securities, which are taxable events, which impede you from using the principle of compound interest. That was on one level. On another level, they were dealing with a debasing currency known as fiat, where it's constantly losing its financial power because every dollar in your pocket, like I said, is only worth 3 cents. So it is constantly debasing. But now we are dealing with an appreciating asset. And this allows for the formulation of the digital credit market, ladies and gentlemen. This is phenomenal because even though we're on blockchain, you know, that still doesn't negate the fact that there's only a certain amount of acceptable yield. And what I mean by that is in the finance world, the higher the APR or APY, the higher the APY, the higher the risk. You see, which is why you're only going to get when you're using stable coins have no impermanent loss, which is why you usually only get 4, 5, or 6% on a stable coin because there's no impermanent loss, so there's no risk. So the APY is very low. But the more risk that is involved, the higher the APY. So when it comes to this, ladies and gentlemen, this is one of the safest ways for you to earn this yield, because your risk in the volatility of Bitcoin is virtually gone. Because I heard one guy that was doing a video on this, and he was like, oh, yeah, well, another exploit that could happen is the volatility of Bitcoin. And that's not so in this, because I've already told you, MicroStrategy is already underwriting or insuring your 11.5%. So they are taking the risk. And even if they had no income for years on end, they have enough liquidity to pay people out for 10, 20, 30, even 40 years, I've heard. You see what I'm saying? So when you go and you look at the statistics, like you as the end user, you do not have exposure to that risk. Okay? So this is strategy stretch product, high yield, low duration, indirect exposure strategies, large Bitcoin balance, and sheet holdings. And this is why USDAT yield is stable. Okay, deeper look at where USDAT yield comes from and why its design makes it scalable and durable across markets. And you can go and you can read this stuff, biggest opportunities, frequently asked questions. You can go and do all of this, ladies and gentlemen, but it doesn't stop there, ladies and gentlemen. I'm just really getting started here. Okay, I just want to give you a background of where I am going with this. Okay, stay tuned, it gets better. Now, let's take a look at another protocol that is even more sophisticated than this, ladies and gentlemen, and that is APYX, or APYX, I like to say. That's how it resonates in my mind. APYX. In other words, APY, your annual yield, pretty much on steroids, because now we are looking at double-digit yield for everyone. I told you, you no longer have to be an accredited investor in order to get access to these type of yields. You can now permissionlessly give yourself a seat at the table. As a matter of fact, it's your own table. You can get in, get out as you see fit, and no one can stop you. You need permission from no one, ladies and gentlemen. The first dividend-backed stablecoin, backed by digital asset treasury preferred equity, enhanced public market yield, delivered on chain, ladies and gentlemen. Now, when I previously watched one of the guys, Steven something, I forget, but he's a YouTuber, and he's a pretty smart guy. I think he's a mathematician or something, but he's always into, like me, always on a hunt for earning good yield on our assets. And I watched his video that he did a month ago, because this has been out like 2 months now. This concept that I'm explaining to you now, it's been out about 2 months now, and I'm just getting, what I'm saying, I'm a little late to the party, but I'm early. But when I saw his video, in the total value lock, there was $56 million a month ago. But if you look here, ladies and gentlemen, we now see that there is a total, there is the APX USD supply is now $301 million. Now that's up from when I entered in a day or two ago. That's up from, it was like, I forget what it was, but it wasn't 301. It was like 252 million, something like that. I think they got, within the last 48 hours, they basically got like another 50 million in total assets. You see what I'm saying? Supplied to the protocol, ladies and gentlemen. And basically what that means is, you know, when you want to exit, when you want to take profit, you can, because the money is there. You see, so when we're talking about digital credit, we're talking about money that actually exists, money that is actually on chain, not money that is printed out of thin air that's not backed by anything, which is what fiat is, which is why every dollar in your pocket says that this note is legal tender for all debts, private and public. Basically, every dollar in your pocket is not even money because it's simply an IOU, ladies and gentlemen, where the government promises to pay this IOU back at some point in the future. But we all know that this 39 trillion is not ever going to be paid, which is why we're switching to a new financial system. Let's go inside. Once we go inside, we see earn, we see swap, we see rewards, transparency, documentation so that you can learn more about it, and you can blog. Okay. Now, when you go to earn and you want to deposit, you can, it's verifying the browser, of course, and you can go in here and you can deposit so that you can get the APY at 12.73%, which is even higher than that of MicroStrategy and of the first protocol, Saturn, that I showed you, okay? And in order to get these tokens, what you would do is you would go over here to the swap tab. You would connect your wallet, of course. And once you connect your wallet, as you can see, my Rabby's already connected over here. And what you would do is you would go over here and you would swap Ethereum USDC. Now, there are other blockchains available. It's also available on Base. But right now, I'm doing Ethereum for a specific reason. And I'll get to that in just a moment because there is more to show you, ladies and gentlemen. We're going through different layers here. Okay? So you supply your USDC and you will receive the APX USD. All right? Once you receive the APX USD, then you can go over here and you can deposit it. All right, let's go over here to deposit. Lock APX USD to receive APY USD. So you see, once you deposit it, your APX USD turns into APY USD, and it becomes a yield-bearing asset backed by variable rate perpetual preferred stock, ladies and gentlemen. This is this is incredible, ladies and gentlemen. And so you go down here, and then it shows you your here are the earning activities. So in other words, once you get these coins, here are the things you can do with it. You can hold YT APX over on Pendle, which is another protocol. You could do this. You could put it over here. You could put it on Curve. You can LP it and or provide a liquidity position with your APY USD. So these are all the things that you can do with it, ladies and gentlemen. You could put it over here. You could borrow AP, or you could take your APX USD into the APX, APY USD, APX USD market over here on Morpho. And this is something I'll probably do in the future, ladies and gentlemen. But right now, I'm keeping it really simple, and I'm going to show you what I'm doing at this point in time. So you see these pips over here. Now, these pips over here are points that you will get because I think what they're going to do is they're gearing up for an airdrop, ladies and gentlemen, and I most certainly want to be involved with that. Okay, so what I'm doing is I'm playing both sides of the fence here. I'm using APY USD and I'm using APX USD. So let me just show you what I'm doing over here. So if we go over here, what I did is I supplied about $100 worth of APY USD, and I put it into this principal token, PT. You got PT and YT over here on Pendle. And this is going on for the next 42 days, ladies and gentlemen. And look at the APY over here. It's even higher. So now instead of the 12% or whatever APYX is offering, now that I bring it over here, now my APY is even higher at 16.99%. And because it's a principal token, ladies and gentlemen, not yield token, that means that APY is locked in for the next 42 days over here on Pendle, ladies and gentlemen. Now that's with this because I chose to LP, you see, this PT token here, PTAPY USD. All right. And the thing is most protocols, when you input a position and you go to add money, you would have to, especially like Aerodrome does that a lot. You have to create a separate position. With this one, you can continue to add to the same position. So I could put $100 in today. I could put 500 in tomorrow. The time will still be the same, but I can continue to increase my position, ladies and gentlemen, as I get more liquidity. So that's on the side of using APY USD that was deposited into APYX over here. You see, I deposited it over here. You see, now here's my protocol balance. My previous protocol balance, it was 100 and something here, and I was earning 12.73. Okay, but once I brought it over here to Pendle, I placed it over here. I put that 102 and I placed it over here. Now I'm earning 16.99%. Now on the other side of the tracks, look at what I'm doing here. Now we got APYX over here also for 42 days. All right. And we have an LP over here for 7.81. But the real deal over here is that I'm earning the points, ladies and gentlemen. So if we look over here and we go back to the earnings section, you see right here, I'm holding on APYX on Pendle, and I'm earning 32% over here. All right. And if you did YT, if you do YT, you're earning 32%. I didn't do YT. What I did is I did the LP position over here in APYX on the Pendle mark. So I'm actually earning 24x in pips as far as points are concerned. Okay, so that's what I'm doing over here. Now, mind you, I only put, two APYX in it because I just wanted to get it started. But I'm going to go ahead and I'm going to add more. So now I'm getting a little bit of an APY over here, but I'm also getting, because remember, APYX is the permissionless one. You see what I'm saying? You don't get any yield on that. It's only when you deposit and you turn it into APY USD. Once you deposit it, it turns into APY USD. But in this form right here, I'm getting 7.81% on this in LP, and I'm getting points from the protocol itself, ladies and gentlemen. So that is what I'm doing, and that is what we're doing with this new digital credit system, all based upon this, all based upon Strategy B and or Michael Saylor's, Bitcoin digital asset treasury company. These other digital asset treasury companies are basically standing on the shoulders of this BTC giant in order to create this new phenomenon known as digital credit, ladies and gentlemen. And it is absolutely phenomenal. And I am glad to bring it for you here today. Now, always remember, ladies and gentlemen, none of this is financial advice. I am not a financial advisor. I am not here to convince you of anything. I am not here to sell you anything. I'm just here to show you things you should know if you want to capture this wave of generational wealth, ladies and gentlemen. And we've only got a few years before you are priced out and hopefully, well, I don't know, because AI is going to steal most people, jobs. You know what I'm saying? Robots are going to steal most of your jobs. You know what I'm saying? This is why you can't fear robots. You can't fear AI, because if you are in this vibration, if you are in with what's going on in the here and now, then you will understand that, as Raoul Paul said, the perfect user for blockchain isn't even human beings. Right now, we're using it. Right now, we're holding. Right now, we're earning yield and things of this, that, and the nature. But very soon, we will be more and more hands off, because the perfect user for blockchain is AI. And the perfect user for AI are AI agents, ladies and gentlemen. Very soon, your AI agents will be interacting on your behalf. As a matter of fact, the apps on your phone, very soon you will not have apps on your phone. The apps on your phone will be replaced by AI agents. I told you guys I'm from the future. I'm already there. You guys got to catch up to me. This is where I am. I'm already there. All right. 20 years from now, I'll be able to say, I told you so. So this is where we are, ladies and gentlemen. So get down or lay down, as they used to say in the streets. You know what I'm saying? This is what it is, and this is the game in town. The things that you could formerly rely on, you can no longer rely on. The things that your parents relied on, you can no longer rely on. If you're relying on your social security, if you're relying on your retirement fund, if you're relying on the banks, you got another thing coming. I'm here to tell you, it is time for you to take hold of your own financial destiny, because if you don't do it, everything that you take refuge in now, you will not be able to in 5 years, 10 years, okay? There is a wave coming of unimaginable proportion. Normal people will be homeless. People that did everything right will be homeless. Harvard graduates cannot find jobs. If you don't understand AI, if you don't understand the blockchain, if you don't understand AI agents and how to use them, you will get left behind. Understand this. I'm here to tell you, you don't even have a choice. You must become financially independent just for survival's sake. Not so that you can drive a Ferrari with your scarf flailing in the wind saying, oh, look at me, ain't I special? It is no longer about that, ladies and gentlemen. It is purely about survival. You must get this generational wealth to protect yourself and so that you can feed your families in the future when the wave hits. This is the Pendecker signing off once again. Get with me, do what you got to do, and together, let's get this crypto.